And Jeff, you liked the banks before we heard from the Fed yesterday. I'm guessing there's nothing you heard yesterday that changed your mind.
Yeah, that's a good guess. The headlines, I think, were largely as expected, right? Accelerated taper, the dots moved more in line with the futures market, which is good. But it's a bit of a balancing act for banks here. Higher short-term rates from hiking would clearly be good for profitability. So on one hand, as bank investors, we're rooting for higher rates. On the other hand, aggressively hiking until something breaks would be bad for the economy and therefore bad for banks because, banks are the oil that lubricates the economy. So I think that's a little bit of what you saw maybe yesterday afternoon was that once you dug a little deeper into the message, it maybe didn't quite seem as hawkish as maybe some had feared, which is good for the economy, but does that mean rates are going to go up as quickly? But you balance it all out. Higher short-term rates, higher interest rates are good for banks, bank profitability. And we're finally seeing loan growth pick up. And I do want to emphasize that because that's really, I think, the next step the banks need. And we're seeing it now. The question is, can it be sustained? I obviously think it will.
I guess a bet on the banks right now is also a bet on a soft landing for the Fed. You think that's something that's going to happen here?
It's who knows, right? That's a bit like, how do you have an edge on what the Fed will do? But I think coming out of all the extraordinary actions the last couple of years with COVID, I think they're going to err on the side of not, knocking down the economy that they've built up. So there's a couple of risks for banks out there, right? One is there, as you were suggesting, a policy mistake where you hike until something breaks? I think they'll be really careful about that. And at least in the near term, the first few hikes are going to be good for banks and bank stocks. The other thing is kind of potentially increased regulation and supervision coming out of Washington. There's a new administration in there. The tone's been a little less bank friendly than we had for the previous administration. Those kind of strike me as the big two risks here.
What's your favorite among the banks?
In general, I still like the big guys, the money center banks, where they have the scale to not only become more efficient, but also to continue investing in things like technology and marketing to gain a lot of market share. So I think Bank of America, BAC, or JP Morgan, JPM, I don't think you can go wrong with either one of those.